this video, I take a look at taking profit. Now, taking profit doesn't seem to be a big deal. After all, that's what you're aiming for, so why would it cause problems, right? That's typical thinking of a newer trader. The reality is that taking profit is something that most traders don't know how to do, and what I mean by that is that they don't have a system to do it. So you get a certain phrases that you run across in the trading forums and such that will say things like, um, nobody ever went broke taking profits, and nothing could be further from the truth. Because if you're too quick to take profits, your winning trades won't cover your losing ones. On the other hand, if you average 10 times the profit on a trade than you do a typical loss, well, you're not going to have to be right that often to be profitable overall. And that's what it all comes down to. You need to look at the bigger picture. So most systems really don't set up with exit signals, and that's a huge disservice to traders, especially new ones. There's a lot of different ways to do it. I mean, you can do it based upon Fibonacci extensions. You can do it on moving averages. You can do it on a set price. You can do it on a round number. Regardless, you need to figure out where a trade's going to go if it goes your way, where you think it would go. So, for example, in this chart, you could make an argument for the NASDAQ in this case hitting 4,500 and taking profits on the move higher, wherever you got in, whatever your system told you to do, because it's a round number. I mean, you can see you've done that. We may very well go past it. But if you tell yourself ahead of time, hey, I'm going to take profit at 4,500, that's what you do. Other traders will do something like, let's just insert a moving average and let's just make it 50. They'll short on a breakdown below and we broke above it, and it told them it was time to get out with a small profit. Granted, you gave back quite a bit in this particular case, but it's part of their system. They might have another moving average. Let's just make this a cross system, if you will. And you can see they'd be buyers here, and they'd still be long because we haven't crossed. They would have been long all the way up here and would have gotten out here. So certainly you can make an argument for the moving crossover system, and it's one that's used by quite a few traders. There's trend line breaks. There's a million different things, but you need to have that laid out ahead. That is absolutely vital. Also, and this goes into risk to reward ratio, you don't want to be trying to pick up 20 pips and risking 300. Obviously that makes your chances of success very slim. So you want to make sure that you not only have a plan to exit or a signal to exit, but you want to know where, and you want to make sure that it's worth risking your trading capital.